Let's bring in Kevin Green, senior markets correspondent, right away to set up the action today. All right, KG, before we jump into some of the earnings that you're across, let's talk about this momentum at the start of the week. Did it make sense to you?
It did make sense. Obviously, last week we saw a little bit of heightened volatility, and you did actually see a little bit of a backwardation, or basically near-term volatility being priced in a lot higher than longer-term volatility if you're looking 3 months out or so. Usually that backwardation does not last for that long, and we did see volatility crush, especially on the front end of the curve. So we did see the VIX get to around 28 last week. Now the VIX is sitting at around 18.5, so we're still pricing in about a 1.1% move to the upside or downside here, but that is actually conducive for equities moving higher. And you did see a little bit of a broadening out yesterday as well, with participation coming from not only the technology sector, communication services, but you're looking at materials, industrials also caught a little bit of a bid as well. And that's exactly what you would like to see. You want to see that kind of performance today as well in order to try to confirm that we're able to hold these levels. The S&P 500 was now able to recapture the 20-day moving average, which is key. Now the next area of support is resistance is going to be the new all-time highs. The only thing that you can take away that would be negative for yesterday, Diane, is the volume was very light. One of the lower volume days that we've seen for the S&P 500 composite, if you look at the total volume, one of the lowest levels that we've seen pretty much all year. So price action definitely did advance, but the volume really didn't complement that move. And so you'd like to see that actually over the next couple of trading sessions here. Buyers really trying to step in, getting really enthusiastic for earnings as well. We do have Netflix on deck. We have Tesla this week. We have some other names that could also move the markets to the upside if we are able to see them beat both on the top and bottom line.
Why do you think volume was so light yesterday, KG?
Yeah, it's usually just caution with new buyers trying to step in at these current levels. Obviously, you get a little bit concerned, I will say maybe a little bit sensitive to the price action, especially with that volatility that we saw last week. So usually individuals and traders will start to inch their way in to the market rather than trying to go all in. And so this could be one of those situations, and I don't think it may be this, but you could look at maybe a light volume day to the upside and maybe a little bit of a reversal, come back, retest some of those key areas of support, maybe that 6,600 level again, and then a lot more buyers might step into this market, really solidifying that support level and then trying to get us a little bit higher. So it's not out of the ordinary. I would actually look at the volatility structure as your key sign and key indicator that the markets can advance. If we're able to still crush this vol for the VIX to go from, let's say, 18.5 to say 17 or even a 16.5 VIX, then that actually is conducive for equities moving higher. And if you're looking at liquidity levels have increased. That's another sign that the bulls are trying to step back into this market. We just need that follow through when it comes to actual transactions hitting the tape.
Okay, let's talk some of the earnings. GM, a big mover in the pre-market, and it looks like, for them, the tariffs are not as bad as expected. Take us through some of your takeaways here.
They're not as bad as expected. That's also because we do see an adjustment to some of these tariffs as well, which is why they actually adjusted their guidance. If you're looking at both top and bottom line, they did beat. Revenue came in at $48.59 billion. Street was looking for around $44.1 billion here, and the adjusted earnings per share came in at $2.80. Street was looking for around $2.31. When you're looking at their full year guidance, they pretty much raised their guidance across the board from adjusted EBIT, moving that up to $12 billion to $13 billion. That's their new range. Previously, that was $10 billion to $12.5 billion. Adjusted earnings per share also got re-rated to the upside. And then you're looking at their automotive free cash flow once again being moved to the upside here. Those adjustments are for two main reasons. They are looking at maybe a little bit of a tariff offset or relief that's being priced into their guidance moving forward. And they're also looking at some demand pockets that are seeing some strength here as well. They are mindful of that. They did have some cost-cutting measures. The CEO, Mary Barra, did actually also kind of reaffirm the fact that they are still looking at the EV market. They do believe that there's going to be some demand there, but they're going to have to be very strategic with it, maybe not focusing so much on the North American sales and looking at other markets in order to sell those vehicles here. So overall, very low bar going into this report. They were able to exceed, but this also kind of shows that the adjustment in tariff policy from the administration, after hearing some of the concerns from these automakers, is actually making a very big difference. And maybe some of these other ones that will be reporting, Ford, Stellantis, for that matter, may see the similar type of results just because of their product mix and also where they're actually producing a lot of these vehicles, especially for Ford that has a little bit more international exposure when it comes to production lines.
Yeah, it will be interesting to see if there's some mirror of the patterns that we're seeing here, and then, how they adjust around tariffs, because I understand the pullback. It's because, in part, obviously, because of the incentives being taken away in terms of tax credits for EVs. Let's talk a little bit about GE as well, firing on all cylinders. The shares have had a strong run so far this year, but adding to the momentum in the pre-market. What are some of your takeaways off the back of its quarterly report card for GE Aerospace?
GE Aerospace, once again, beating both on the top and bottom line here. Now, there has been a concern going into this report that obviously Boeing had a little bit of restriction when it came to producing new airplanes, and that could actually hit them as far as a provider of these engines, but that was not the case. We actually see revenue coming in at $11.31 billion. Street was looking for $10.41 billion. You're looking at around 25% growth, give or take, on a year-over-year basis, and the adjusted earnings per share came in at $1.66. Street was looking for $1.46 here. But when you're looking at commercial engines and services revenue, that actually grew by 27% on a year-over-year basis. Once again, they did raise their guidance to the upside. Now, their adjusted earnings per share for fiscal year 2025, the range is now $6 to $6.20. Previously, it was $5.60 to $5.80 here. Also re-rating their revenue guidance, moving higher. The reason why they're seeing this demand, it's actually the aftermarket maintenance of these Boeing planes that are already put into place that they're actually seeing a really sizable uptick. So yes, they're not getting the new engines to Boeing and seeing this backfill quite yet, but the existing planes that are out there, they do need to be worked on, and that's where they're seeing these tailwinds, at least for now. We also know that there is a refresh cycle for a lot of these airline companies, especially when you're looking at Southwest, and then there's going to be some continued deals when it comes to China as well, which will be a direct, GE Aerospace will be a direct beneficiary of that. So a really good report. Stocks up around 2%. The industrials, for the most part, have had a really good run this year. They were one of the outperformers kind of throughout the whole pullback, and it seems like GE Aerospace continues to be a beneficiary of that, even though we have seen maybe new orders for Boeing planes kind of level off because of some of the regulatory headwinds here in the United States.
Okay, KG, great breakdown there. Let's talk your levels on the S&P 500. Where are you looking to the upside and the downside today?
Yeah, to the upside, 67.70. To the downside, 66.75. Still a wide range, but volatility is coming in. You're applying, once again, about a 1.15% move to the upside or downside here. So the bulls have it in their favor. You want to see some volume to really kind of confirm this price action, though, Diane.
Okay, 67.70 to the upside is that target if you're looking for that one. All right, thank you, KG. That's our Kevin Green, Senior Markets Correspondent.